All right, just a little bit of housekeeping, just so everybody's aware. We will be recording, so if you do not want to have your face on the recording, that's okay. Just turn off your camera. We do ask that you keep yourself muted during the presentation part, but during the question period, feel free to unmute yourself. Karen, I will give you a chance to introduce yourself and talk with Tara there in a little bit. Like I said, we're just going to do the housekeeping introductions and then the floor is open. Again, if you don't feel comfortable unmuting yourself, put it in the chat. I will be monitoring it and relaying those to Tara. So let me first introduce Tara. Tara is a financial empowerment coach and business consultant from Cobden, Ontario. She's passionate financial educator and entrepreneurial advocate. She's a former I can't talk anymore. Leave a message after the beep.
All right.
She's a former financial advisor, a former controller in the agribusiness sector, and she's a passionate board member for her local agricultural society. Recently, she has developed a group workshop series called Financial Empowerment for Women Entrepreneurs, designed specifically for those entrepreneurs who are passionate about their mission and vision, but need a little help on the financial side of things. So Tara, I'm going to hand it over to you. And like I said, Karen, if you want to unmute yourself, introduce yourself. One last thing is if anybody would like a copy of the recording today, please feel free to send me an email at communications@paro.ca, and I will put that in the chat.
Okay, thank you very much. Yeah, Karen, if you can just give me like a quick synopsis about what your business is and where you currently are with your bookkeeping practices.
Okay, thanks. So what I do is it's a service. I'm working in I do social network mapping and analysis. So it's a particular type of software, and I've been working with different professors at the university, helping them with their research in that in areas that would use that type of skill.
Okay.
So I've been doing projects since 2015, and I've been in the last year and a half, I've developed a business model so I can seek out contracts and jobs doing this outside of academia and in the business sector. And right now I've got a few contracts on the go, so it's kind of taken a back burner, but when I have the lull, then I pick it up again. So far, the amount of money I've made is a lot less than that, like $35,000 cutoff or 30,000. So I haven't had to think about HST or anything like that.
Right.
And I've been so far just adding it into my taxes, just like I keep my own Excel spreadsheets.
Mm-hmm.
And I invoice for the contracts, so I have those. But I guess if I'm wanting to be bringing in more contracts, I'd like to formalize a more structured kind of bookkeeping system.
Mm-hmm.
So whatever that ends up looking like, if it's just Excel spreadsheets that I just fill in as I go along, other than my own kind of haphazard way, like I keep track of all my hours and that, but I think, yeah, so anyways, here to learn, pick up new skills that can help with organization and streamlining. Yeah.
Okay, everybody. So that's great. Thank you for that. It sounds to me like everybody's kind of in the same place with their bookkeeping. So that's awesome because we can focus on where you're at without getting really too deep into some of the other bookkeeping practices that it wouldn't really be appropriate for your businesses currently. So that's great. So my final question for everybody is, it's my understanding this is session number 3 for bookkeeping. So have you participated in the other 2? Yes. 1. Karen's got 1 of 2. Yeah. Okay. And
I missed the second one, and I'd love to get the recording for that. I'll
Okay.
contact her about that.
Okay.
Yeah,
So
Kylie.
do we have any questions off the bat about bookkeeping from the other two sessions? Because the first few slides that I've got are a review of the first two parts. If there are none, that's okay.
Because I don't understand all of it all of the time. You don't have to review it. It's just one of those things. I hear the thing, but unless I'm implementing and doing it, it doesn't make actual sense to me.
Yeah.
So I just want to put that out there.
Okay, I got it. So let me share my screen and just give me a thumbs up that you can see it. Yeah, okay, great. Okay, so it looks like in part 2, you talked about I can admit people too. So it looks to me that you talked about service versus sales versus manufacturing. And I think you're mostly in service-based businesses, except for Michelle. I think Michelle does some sales. She's got products on the shelf that she then sells in retail. So that's good. So why does this matter? It really is all about the processes that we use, right? Which one that we're going to do based on what your business is. So we're going to talk mostly about service and sales. We are not going to get into manufacturing because it's really unnecessary for this group. So let's talk about cash basis accounting. So is this something that you've already covered? Is this review or is this kind of new? I'm thinking it's new. New? Okay. All right. So let's talk about cash basis accounting. So for most of you, from what I understand from what you've told me, you're all going to be pretty much cash basis accounting. So that means that your revenue and expenses are recorded when they're received. Okay, there's two different kinds of accounting practices. One is cash and one is accrual. So if we are talking about recording our income and expenses on a spreadsheet, nobody's using QuickBooks at this point or any kind of software, correct? Yeah, okay. So that means that you're going to send out your invoices and the money is going to get recorded when you get paid, right? So how many of you work that way? So you have a client, you take on a contract, you're going to say, okay, I'm going to do this amount of work. And then at the end of my time working for you, I'm going to send you an invoice and then you're going to pay me. That's how it works for the most part. Yeah. Okay. So in this kind of accounting, you're going to have a spreadsheet that tracks when you send that invoice and how much it was, and then you're going to track when it's being paid, right? That's how that's going to work. So when you're doing that, you're going to have, I usually like to see two spreadsheets, or you can have, if it's one Excel sheet, you maybe could have a tab for revenue and then another tab for expenses, right? So all of your income is going to be recorded in one, and then all of your expenses are going to be recorded in the other. So when you then at the end of the month or the end of the year, whenever you're doing it, you're going to total that up. So you're going to see all of the revenue that you brought in and you're going to have a total. And then you're going to see all of the expenses that went out for that same time period. And you're going to have a total. And then your net income is going to be determined by subtracting all of your expenses from your revenue. So that's how you're going to know how much you made that month, right? Makes sense? So the majority of small businesses use this method. They're, when you're starting out, or if you're not bringing in, you don't have a ton of transactions. Like some of you mentioned, you're not at the threshold. It's the $30,000 threshold in any 4 quarters that make you subject to HST. So once you hit that 30,000, then you have to start charging HST. If you're under that, that's okay. And I can't, my little bar is here at the bottom, so I can't read the bottom one. is a cash basis system. Okay. Do you guys see that bar? Do you see my bar too, or do you actually see the screen? You see the
We see
screen?
the screen. Yeah.
Hey,
It's your
if I go
floating
back,
bar, you can move it.
can you read me what the bottom one is? What the bottom point says?
It says your personal finances is a cash-based system.
Okay, thank you. I wonder if I can move this.
Your floating
But
bar usually.
if I can move my little bar. Oh, there we go. Okay, I did it. Perfect. Okay. Technical win for today. All right. Yeah. So your personal finance is cash based. So it means that, you know, it's not about timing. I hesitate to get into accrual because I don't want to confuse anybody. But just so that you know, an accrual based business means that transactions are recorded when they occur. So if you are using QuickBooks, for example, and I'll talk about this a little bit later anyway, because it's some of the material that's in the presentation. When you're using QuickBooks and you, let's say today, for example, it's September 29th. So today you finish a job and you're going to invoice client A. All right, so you enter that invoice into QuickBooks and QuickBooks will generate an invoice that says, okay, you've made $500 in consulting fees. Okay, so that goes out. So at that point in time on September 29th, QuickBooks records a sale. So it records $500 of revenue and it records a receivable. So you are owed, a receivable means you're owed that money. So it creates that receivable as of September 29th. So as far as Revenue Canada is concerned, you earned that income on September 29th. In a cash basis system, which is what most of you are using, if not all of you, that income is not recorded on September 29th. It's recorded the day you get paid. Okay? Yes, LA has a question.
Okay, and this is it's legitimate. If I give my invoice, for example, I give one of my clients an invoice on the last day of any given month.
Yes.
Almost always they pay me either later that day because it's an agreed amount. We know what's happening. Everybody's planned ahead. We're good to go. Sometimes they pay me on the first, of the month, which is the next day.
Mm-hmm.
Sometimes they pay me on the spot and they say, yep, here's your payment. Sometimes it waits until, because of the weekend, sometimes it waits until the next business day.
Mm-hmm.
Do I do that as a cash basis or is that an accrual situation?
Technically it's accrual for like a couple days, but I would still consider it cash. It's still cash because it's like
bothered.
It's not a long time. And here's the thing, these are accounting terms. Okay, like this is all if you're doing, you know, official books, right? I have, in my experience with entrepreneurs, you don't really need to worry about whether you're cash or accrual, right? It matters more when you are incorporated, or it matters if you are a farmer and you've got big sums of money that are carrying forward over the end of the year. Okay, so for you, most of you, you're going to do your taxes on a calendar basis, right? You're going to look at what you brought in from January 1st to December 31st. So it doesn't matter if you got paid on September 29th or October 3rd. Right? It's not going to be that, it's not going to make that much of a difference, or it's not going to make any difference for you. This is just so that you can manage your own record keeping and to make sure that your own record keeping is accurate. All right. So yeah, exactly. So it only matters if you say bill them, if you billed like $5,000 on December 29th and you didn't get paid until January, tell your accountant that happened and they can make the distinction of whether or not that was income in 2021 or 2022. Right? Really pay attention to it at the end of the year, because you're going to want to let them know what happened and then they can help you with that. Right? I'm assuming people are using an accountant to do their taxes.
I have an accountant who, now that I have a business, who's done my personal, and now that I'm doing my business, they're going to be charging me more for that service, which is fine by
Yes.
me. And I've made it a rule in my head that if money is owed to me by the 31st of December, because of the way my contract is set up, it's like, no, you're paying me before the winter break even happens.
Yep,
So I don't have to deal with this baloney business going into the new year.
that's a good idea.
Pay up front.
That's a good practice. And I would encourage everybody to get in touch with their accountant before you go to do your taxes. Like even like in November would be a good time, and say, okay, what are you going to need from me to make sure that this runs smoothly, right? Because it's better to know ahead of time than try to scramble after the fact. Okay. All right. We're good on cash basis accounting. All right. The crux of it all, cash basis, is just everything is recorded when the money comes in and or out of your bank account. That's the important thing to remember. And this is also single entry accounting. So there's single entry and double entry. We are going to focus on single entry today because, again, double entry accounting gets into what happens when you're using accounting software. And I think that for the people in this room, we're using an Excel spreadsheet, right? This is single entry accounting. We're not going to worry about the double entry. I'm going to explain it to you so that you have like a high level understanding of what it is, but it's not the type of accounting that most of you are doing. So single entry, this is typically used by small business and it functions like your personal checkbook, and transactions are entered on the ledger by the date, account name, amount, a new balance is calculated, and the ledger awaits the next business transaction. So that's all accounting speak for your Excel spreadsheet. Okay, so your ledger is just an accounting term for a spreadsheet, really. It's a place where you're tracking your income and expenses. So anytime you see the word ledger, that's what we're talking about. We're talking about the record, that spreadsheet record of what you're doing. We will explain it more as we go through. So the next thing we're going to talk about is bank reconciliation. So we're going to get back to our income and expenses tracking in just a minute. But for a second, we're going to talk about bank reconciliation. So I highly encourage all of the entrepreneurs that I work with to have a separate bank account for your business. One, if not two. Two is more important if you're charging HST, but if you're not currently charging HST, then one will probably do. But it is very good practice to keep a separate bank account. And if you use a credit card in your business, to have a separate bank account for your business. Now, having said that, please keep in mind that it does not have to be a business bank account. And I'm using air quotes there because I want to make a distinction. When you go to your bank and you say, I have a business and I want to set up a business bank account, they're going to give you something you do not need. Okay. So it can be just a bank account that is personal to you, because most of you, I'm assuming, you're not incorporated. You're all solopreneurs. This is just income that's coming to you personally. You're not incorporated. When you have that separate bank account, it becomes much, much easier to track your income and expenses because it's not intermingled with your personal finances, right? It becomes much easier to track. And you're going to be able to do a bank reconciliation at the end of every month so that you'll be able to see all of your transactions, make sure they're recorded correctly, and see if there's been anything funny going on, any mistakes or any errors or whatnot. Okay, so I would highly encourage everybody to have a bank account that is just for business. I'll give you an example of how I run my business. So I have a day job. I work for a financial planning office out of Kingston, Ontario. And I do my financial empowerment and my financial literacy and speaking engagements like this on the side, like in addition to my business. So I have my day job, and then I have TFT Consulting, which is my business. So TFT Consulting has its own bank account. It's not a business bank account. It's just a second personal bank account that I opened with my bank. And any of the revenue that I earn as a consultant goes into that bank account. My T4 job, that goes into my personal bank account. But all of my business expenses come to the business account. Then I have a separate credit card. So if I'm ordering stuff from Staples, or if I'm going to Walmart to buy things for the business, I can use that particular credit card. So I actually will separate on the what do you call it? You know, when you're going in through the cash, like the conveyor belt thing, whatever I'm buying for business expenses goes in one pile, and I can put one of those little separators on, and everything that's personal goes in the other pile. And then I use one card for one and one card for the other. It makes it so much easier for me to track my own income expenses. And it's easier if I were to have a bookkeeper. They don't need to worry about any of my personal stuff. They're only dealing with my business stuff. So in the long run, it makes things a lot easier. Okay. So when we're talking about bank reconciliations, we're going to talk about, I'm going to show you what it looks like to do a bank reconciliation. This really only works if you're using a separate bank account. If you're trying to do it with personal, it's going to be complicated. Okay. So here's how a bank reconciliation works. And if you're using QuickBooks, it has a reconciliation function in it, which will look a little bit different. But here's what it looks like. So you start with your monthly bank statement. Okay. You go to the, we can pull it off our online banking. It's very simple to do. So you can tell the age of this presentation because we're talking about canceled checks. I don't know how many of you use checks in your business. I'm not sure, if you do or you don't. But we're talking about canceled checks here, being that the checks have gone through, right? So you know that the checks have actually gone through the bank account. They're not outstanding. The purpose of a bank reconciliation in most businesses is to make sure that the bank balance that is recorded is accurate. That's what we're trying to do. So if you were to do a bank reconciliation, this is what you would have to do. You'd put your canceled checks in a numerical order. You'd mark all the entries that have cleared through the bank, and you'd write outstanding on any that haven't gone through. So an example of this would be, say you were purchasing some supplies for your business. So you have written a check to the supplier for $1,000, and you sent that check off in the mail, and it was the end of the month. So your accounting system says that $1,000 has gone out, but your bank balance, it hasn't been cashed yet. So it's still outstanding. I don't think any of you are in a situation where this is applicable. Tell me if I'm wrong. Does anybody send out checks? No. Okay. So then what we're going to talk about for our bank reconciliation then, where it becomes more appropriate and more valuable for you, is making sure that the transactions that have gone through your bank are recorded in your income and expenses. So rather than worry about these outstanding checks and things like that, what you're going to worry about is taking your bank statement and comparing it to your spreadsheet and making sure that at the end of every month, all of the income that you've received, that's business income, is recorded in your spreadsheet. And all of the expenses that have gone out that are for your business are recorded in your spreadsheet. LA has a question.
Yeah, quick question. So, because I haven't done that for my business yet, I usually have the paper receipt,
Yep.
and I check it off, and I'm like, yes, this is from Walmart for office supplies, and I go check mark on the bank statement, and then I
Yep.
attach it to. I've usually put a sticky note on it, and I say, oh, this was an office expense, so that my accountants, because I love my accountants, by the way, we're good people, so I write on it, this is a business expense. These are fuel expenses. And I bundle it all up so that when they're inputting it and doing their work, it's like super quick. Is that what we're talking about?
Yeah. So are they reconciling your bank account? Or they're just entering the receipts that you give them?
They're entering all of the receipts, and I think they reconcile it because if there is a receipt missing, let me tell you, I get a quick email saying, hey, we know that this was a business expense on the road, but what is it for, like, where's the actual paper receipt? And almost always it was a fast food restaurant who did not give me a receipt
Right.
for.
Okay.
But yeah.
So they're doing the reconciliation for you, it sounds like. You have a separate bank account for your business?
I don't currently know.
Yeah. So they're looking at you give them your bank statement?
They get, yeah, and I work with one client that I actually do all of this for the one client, and we hand over the personal bank statement and the business bank statement, because they're a solopreneur also, and so things kind of get blurred because they get extra points using their personal card than they do the business, and the business account is just draining them like left, right, and center. It's like not helpful at all.
Yeah, that's why you don't open a business account. There's no bankers on the call, is there? Because they'll give me trouble.
Sense here as well. If anyone goes to open a business bank account, number one, they're going to pay more in fees. Number two, they have to make sure they have their business name registration with them at the time, or they won't open it. So I always recommend clients have a separate account as well. But the other thing that LA just pointed out is, if everything goes through one account and you lose receipts, you've got when you reconcile on your statement, all the purchases and revenue. So it's much more difficult to lose anything and to track it. Yeah, so it's, again, I totally agree with Tara that it's so much simpler if it's a separate account, but just don't get the business bank account.
It doesn't have to be
on everything.
And now, Michelle, I see your hand up. I'm going to ask you your question in just a second. Now it's really easy to open up these online accounts, and they're very inexpensive. So most banks have an online account version that you can just open up from sitting at home. It's very, very simple to do, and it can be attached to all of your other banking. Yeah, Michelle, your question.
It's not really a question, but I do have a business account. And what happens is, since I don't do too many checks or too many transactions in there, sometimes I can negotiate. So it went from a $35 a month to $25 a month, or 20. And then when I use it again, then they.
Yeah. Oh, you're muted again.
Oh, sorry. Yeah. If they see that I see it, during the pandemic, I've had less sales to put in, so they lower it down. But then if they see more activities, they put it back up.
Yeah, that's true. Thank you for that, Michelle. Karen.
I'm imagining you can claim your bank fees as expenses.
Yeah, you can.
Yeah, I know my personal account, I think I pay $15 or $16 a month for. You want to know of any banks where you can pay less than that for just a regular account? That's still 150, 100.
Yeah, Tangerine, the ones that I know of are like Tangerine, that's Scotiabank's. What's CIBC? Simply Financial and like
Simply and
PC Financial.
Yeah.
Yeah, all the ones that don't have like actual brick and mortar bank locations, those ones are usually inexpensive. I'm with a credit union, and my personal bank account I think is like $12.95, but the secondary account that I use for revenue and expenses for the business is like $7.95 because it's an online version, right?
And most of my clients that have a lot of transactions going through are paying between $100 and $200 a month on a business account, which is, it's insane.
Yeah.
Yeah, it's crazy. So I totally agree with Tara. Don't get that business account. They even charge businesses for deposits. Like
Yeah.
it bill you on everything.
Yeah, no, unless you're incorporated, it's really unnecessary, right?
I work with somebody and they get charged every time they put money into like a machine. They don't even see anybody. If they put money into the machine, they're charged like $15.
Yeah.
Every time they're doing, and it's like, this is not okay.
Yeah. Yeah.
And they happen to be with a credit union, and the credit union has closed 2 of their accounts because
Mhm.
they weren't using them during the pandemic, and they closed the accounts and took the money. I'm not okay with that either, but that's their business to battle, not mine.
Yeah. Yeah. It's a good, it's a good idea to keep an eye on your bank and get one that's working for you. All right, I'm keeping an eye on the time here, so we'll move right along. This is what I'm not going to worry too much about this, because this is if you have, this is a traditional bank reconciliation. If you have outstanding checks, this is sort of what it looks like. But honestly, I don't think any of you are in a position that you're going to worry about this. So we're not going to worry about it too much. Okay. So here are some bookkeeping good to knows. We're going to do number 4. We're not going to worry about 5 and 6 because that's accounting information. That's like if you were a bookkeeper being hired as a bookkeeper. So, okay. So determine the correct account category. So this is really important when you're recording your income and expenses, and a good idea to work with your accountant as to how they would like to see your accounts set up. So when I'm using the term account, what I'm talking about is category. So let's say, revenue and expenses. So one of the things I talk about with the women that I work with in the financial empowerment program is really thinking deeply about the different lines of revenue and the different expenses that you have in your business. So first of all, revenue. What are the ways that your business makes money? So LA, you said you've got like Norwex and you have personal assistant income, right? So you would have, I think Norwex, there's like a commission structure, sort of. Is that how it works?
There is a commission structure, and the funny you should say that is I shouldn't say I haven't gotten paid. I haven't gotten paid a single cent because I don't have online banking. And so the one time I got paid out, I got shipped free product. I'm not complaining that I got free product.
Right.
Not complaining because I'm using it, but and that's probably one of those things that I don't know how it really works.
Yeah. Okay. So eventually you're going to have some income from Norwex, right? So in your revenue and expenses, you would have, and I would encourage you actually to have a separate spreadsheet for Norwex stuff and personal assistant stuff.
Okay.
Right? Because it really is 2 separate endeavors that you're dealing with. And so, and you kind of want to track how profitable each one is, right? Like, is it worth it for you to spend your time and energy in Norwex? So what you want to know, what your revenue was for the month and what your expenses were for the month. So you can calculate and say, okay, I've spent, 30 hours this month doing this, and at the end of the day, I have this many dollars. This is what I've earned. So is it worth it for me to continue in this endeavor? And, or, you know, if you decide, well, yeah, it is, I think I could do better, then you can track going forward, you know, okay, well, last month wasn't so great, but this month is better. What can I do to improve it so that next month it's even better? You're only going to know that if you're tracking this stuff on a month-to-month basis, right? So what are your revenue streams? So you would have your commission, and then on the service business side, you would have, okay, well, I did, you know, I don't know what you call yourself. It's a consultant or personal assistant, you know, that's your revenue line, right? For me, I have, you know, my one-on-one coaching revenue. Then I have my group program revenue. Then I have speaking engagement revenue, right? So I can see in any 1 month what my sales are rather than just one total revenue stream. We're doing that so that when we go back to look at the data, when we go back to look at our accounting, we can clearly see where our revenue is coming from, which lines of our business are the most profitable for us, right? So when we're talking about our account category, that's what we're talking about. What are our revenue streams? We don't have to just say sales, $1,000. We can say, you know, speaking this much, whatever it is. Make sense? And same thing on our expenses when we're talking about expenses. So when you have those receipts, and this is LA again, I'll use you. Thank you for allowing me to use you as an example. But when you don't say specifically on your receipt what it is, your bookkeeper is going to come back to you because they need to know where to categorize that expense. Is it fuel? Is it interest? Is it bank fees? So a lot of people lump bank fees and interest together. No, you don't need to. You can separate them out and say, I paid this much in bank fees, I paid this much in interest. I would also encourage you, if you're recording interest expense, to separate loan interest from credit card interest and supplier interest. So again, this is one of the things we talk about in my financial empowerment program is when you have supplier interest, that is an interest charge on a bill that you didn't pay on time, right? That's different from paying loan interest on a business loan that you took out to finance your business, right? Those two interest charges are a little different. Same with credit card interest. Credit card interest is different again. So be as specific as you can when you're recording these things in your spreadsheet so that you can look at the data later and say at the end of the year, oh my God, I paid this much in bank fees, or I paid this much in credit card expense. Credit card interest. It's not all lumped together so that you can it allows you as the business owner to make better decisions moving forward when you have that information that you can look back on, right? That's what we're trying to do. The whole purpose of managing your books effectively is to make sure that you have the information that you need to make better, more informed decisions moving forward. All right, so we're going to talk about, we've got the correct line item account, book sales revenue versus workshop revenue. Yeah, that's kind of reiterating the first point, which is making sure you've got that category correct. So how are you recording those transactions and making sure that it's consistent, that you can give yourself a total at the end of the year? Workshop supplies versus office supplies, right? So which line of business is your expense related to, right? For LA, she might have some expenses like office supplies. So she goes to Walmart, she might have some office supplies expense that are for her personal assistant business. And she might have some food expenses for the presentation that she's giving for a Norwex party, right? Make sure that so she wouldn't have one expense for that Walmart receipt. It might actually be split into two. and to make sure that she writes that. It's good practice to write right on the back of your receipt what it was for, because sometimes we forget, right? We're in a hurry, we're on the go all of the time. Make sure that you write on the back of the receipt what it was for. Quick side note here, when managing your receipts, it's super helpful to have one of these little guys in your car, in your purse, wherever. It's just a little card folder, and it's got little tabs inside. They're really inexpensive. It might be $2. I don't know. They're really inexpensive. But when I'm traveling for business, I keep this in my bag. And if I have fuel receipts or meals or parking, whatever it happens to be, it goes right in here, so that when I get back, I can put it into my accounting or put it into my spreadsheet. Really, really handy. Okay. And then, of course, make sure that you're consistent and accurate and recording the right amount when you're posting your transaction. So posting your transaction just means when you're recording it into your spreadsheet. So the next part of the presentation is about double entry books. If it's okay with everybody, I think I'm just going to skip it, because I don't think anybody is using accounting software. So I don't want to confuse anybody too much about what double entry is. Is that okay? We're all good with that? Okay. I will just give you my 2 cents on debits and credits, because when we get into accounting, we talk a lot about debits and credits. Debit means left and credit means right. So quite often when we get into debits and credits, we are so used to debit means money out and credit means money in. When we are in accounting, that way of thinking does not apply. Okay, just remember that debit means left and credit means right. So when we're doing actual accounting entries with T charts and things like that, which is what the next piece is about, these T accounts, debit is left and credit is right. So there's a big accounting equation when you're using QuickBooks or when you get into a higher level accounting. You learn all about these T accounts and credits and debits and all that kind of stuff. For what you're doing, managing your revenue and expenses, you don't need to worry about this. When you get into QuickBooks Online and you start using accounting software, that's when you should start to get into learning about these things, because then you'll understand what QuickBooks is doing behind the scenes. But for our purposes today, I don't think that it's necessary. Okay, yeah, so this is posting in our, when you're posting transactions and using actual bookkeeping T accounts, this is sort of what it looks like. But again, I don't want to confuse anybody by going into all of this stuff. Let's see here. Let's see. Okay. So we have about 10 minutes left and I don't want to go over. So this is really coming down to the end. So we have, when we're doing proper bookkeeping, we've got different journals. So again, I'll say a journal, a ledger, these terms are relatively, they're for similar things. So when we're talking about sales journals, your sales journal is your first tab on your spreadsheet where you're recording all of your revenue. In accounting terms, it's called a sales journal because what you're doing is you're recording all of the income that's coming into your business. So if you were to move into like a QuickBooks or a Sage platform where you're using accounting software, it would be a sales journal. I will say that QuickBooks Online has come a long way today, and you can actually, it doesn't actually use a lot of these accounting terms. For the most part, it uses layman's terms. So it would be, it's your sales or your revenue. That's what it is. Your purchase journals, everything bought on credit. For you, it would be your expenses. So you wouldn't really use a purchase journal, because this is kind of relating to that double entry where you're buying it one day and you're paying for it later. But since we're just talking about cash, your purchase journal is really your expense journal. And then you've got cash receipts and cash payments, incoming and outgoing cash. That's really, in your situation, relating to your bank reconciliation. So this is where you are recording your money coming in and your money going out. But for you, you're not recording that anywhere other than it's being tracked in your bank, on your bank statement, right? And then in accounting, we have a general journal where it's recording literally everything. But I don't think anybody is in the situation where we're doing that. Just some accounting terms for you. Okay, so we're back at the beginning. I'm going to stop sharing there, and I'm going to leave the rest of the time open for questions. What can I help you with as it relates to your business? Did we cover anything that was very confusing that you would like some clarification on? Carrie.
Well, at this point, and I want to say like 20 years ago, I had a business where I did take everything to an accountant at the end of the year, and I had them set up my books, and then I gave everything to them to help to create whatever I needed for the taxes. Then some kind of, I can't remember what it was called then, probably some kind of reconciliation form or something. So far right now, like even this past year, I just did my taxes myself. How important is it to get an accountant? Like,
you're service-based, right? And you're not charging HST yet. So I'm thinking your transactions are pretty simple, right? You've probably got, so you've got your revenue from your clients that's coming in. You've got business use of home expenses, which we didn't talk about today.
Yeah, and I really haven't even been looking at that yet. So this year, I guess I should start thinking about that.
Yeah, so there might be, so the advantage for you of working with an accountant would be your accountant would ask you that and say, you know, you would have extra things that you could claim because you're working from home and you've got a, you know, a home office. So you can claim a portion of your expenses for your house. So again, I will preface this by saying I am not an accountant. I am a bookkeeper by trade, but I do know enough that when you have an office in your home, so for me, I'll use myself as an example, I use my basement. So it's about 15% or 10 to 15% of the total square footage of my house. So that's step one, is you say, okay, my house is this many square feet, and of that, this many square feet is my office. So then you divide your office square footage by your total square footage, and that gives you a percentage. So then you can use that percentage to claim your hydro and any other home expenses that you've got, right? Your accountant will be able to walk you through that process. Right. Same thing as with a vehicle. If you're using a vehicle, there's a portion of it that you'll be able to claim for business use. Your accountant can walk you through and make sure that those numbers are accurate.
Right.
Right.
Great.
Yeah.
Okay, thanks.
You're welcome. And for the most part, what they're going to do is ask you for the spreadsheet and say, okay, give me your revenue and expenses. And then they'll go through the extra stuff with you.
Right.
Okay. Anybody else?
Just one more thing I think that should be mentioned, and you just touched on it. If anyone is going to claim their vehicle expenses, they really do have to track mileage, and whether I usually recommend they don't just track everything, they just track their business mileage and then subtract it from there, but just have to have some record of how much mileage they put in for the year. So just track that or they can't claim it, or it's more difficult.
Yeah, that's right. So a lot of people have a little book in their car that will do that. And there is some software now. You can put an app on your phone, and when you're going for business, you just click your app that you're going, and your phone tracks your mileage for you.
Yeah, it's really simple now.
LA.
Okay, what if you take like public transit to something for work, like for business expense, like commuting wise? And two, how does renting a vehicle come into play for that?
These are very good tax questions. Again, not an accountant. I'll give you my opinion on as a bookkeeper.
Your opinion, I'll take it.
Yeah. As a bookkeeper, if you're going on public transit, do you have a pass?
Sometimes I have a pass and sometimes I've paid just for tickets.
So if you have a pass, I would think, and again, you'd have to check with an accountant to be sure. But if it's a pass, then I would think that you would say, well, I used, this much of the pass for business use in a month. So you'd be able to do a percentage of it. If you're paying out of pocket for it, keep that receipt and that becomes a business expense. Same with parking. If you go somewhere and you park and you're there for business, you keep that parking receipt and it becomes a business expense.
Okay, thank you.
Yeah. Michelle.
Yes, I've always had a hard time tracking like my mileage for my vehicle for the business that, I do. And the thing is, I get not punished, but then, my insurance wants to know, are you using your vehicle for personal use or, business use? So like, if it's 10%, it doesn't matter. They charge me extra because I'm using it as a business.
Yeah.
So then you get punished that way too. So
and you you can use that portion of the insurance is an expense to your business.
Right.
Yeah.
It's just more
tracking.
tracking.
I know. Yeah.
And again, be careful there, because again, I've had clients who told the insurance company they weren't using their vehicle, were using the vehicle, had an incident, and then they're not covered because it was used for business. So as Tara said, let the insurance company know and then just write that percentage off.
Yeah, as a business expense. That's the best you can do. All right.
And as somebody who works with other people, and again, I do love my accountants. They're absolutely lovely. Part of their team are bookkeepers, and then there's an accountant who oversees the accounting department of the things. Honestly, I don't claim to understand it all, but I have a female run business who does it, and I travel to them because they are good and because I connect with them. And if you want a recommendation, I'm more than happy to pass on information. They are lovely, and you can use them apparently as a business expense. Like it goes under a line of accounting expenses, and so makes things a little bit more palatable to, okay, I've got to do this.
That's right. Perfect. I will say closing remarks, that is one of the most important things when you're dealing with a professional service provider. Make sure that it is somebody that you trust and somebody that you feel very comfortable with, that you can ask questions back and forth and you don't feel stupid when you ask questions, because there are truly no stupid questions when it comes to finance and money management. There are none. So make sure that you're working with somebody that you feel totally comfortable with. Okay,
All right, well, Tara, thank you so much for coming today. Thank you, everybody, for joining us. Again, I have put in the chat, if you would like a copy of today's recording, please feel free to email me at communications@paro.ca. And I will get them out to you either to this afternoon or Friday, as our office will be closed tomorrow in recognition of the National Day of Truth and Reconciliation. All right, and thank you again, everybody, for coming. Thank you, Tara, and everybody have a great day.